Launch control, this is Houston. We are go for launch.
What's going on, guys? Welcome back to another Moon Monkey Trades video. I'm going to be showing you a quick tip and trick that can significantly help you with trading and figuring out when a stock is going to stop and reverse at the tops or bottoms, especially on an intraday chart. So this actually works several different ways and in different applications with different patterns, but I'm going to show you, just for this example in this video, a bull flag pattern and how to use volume to detect where the bottom of the flag is going to be, so you can get a better idea of when it's going to break out. The first thing I'm going to do is I'm going to draw a line across the bottom here that I can use to show you volume to go along with the chart. It's super important to understand why things move the way that they do and using supply and demand, because it helps you take the emotion out of the trade. Because what happens a lot of times if you enter a trade or you see a stock take off at the open of the market, you get excited and all the logic of trading patterns and volume comes out the window. All you see is these big green bars and you end up buying, and it costs you money. And I'm going to show you how to keep yourself from making that mistake. So a lot of times when the market opens, and I'm going to put an O right here for market open, the first 15-20 minutes the stock will start to run up and you'll get 2 or 3 big green candles, especially when the futures market is up before the market opens. Don't make the mistake of jumping in on this at the open. What you want to wait is for a pullback, and one of the pullbacks you'll get, especially in the morning, is a bull flag pattern. And all a bull flag pattern is I'll show you with the line over here, is when a stock runs up, this is your pole of the flag. You get a pullback, and then the stock makes another run to the upside. It won't be perfect. You may have 2 candles, 3 candles, 4 or 5 candles in a row before you get a bull flag, but I'm just using 3 for example. So instead of getting here at the open and chasing the emotion on the pop at the market open, you'll start to get a pullback starting with a red candle. And as soon as I see this, I'm thinking this is how a bull flag starts. It may not turn into a bull flag, but I'm already thinking in that direction, so I can already plan ahead of how I'm going to enter this trade. So when we ran up in the morning, what you also get is you get these big spikes in volume as we run up, showing you the strength of the trend. And then when we get a red bar, you'll get a spike in red volume. So what we're looking for is, as we come down, we get our second candle and go, okay, yeah, we're definitely starting to form a flag pattern. When we get the third candle, what happens is each candle, the volume should start to get smaller and smaller. And after I show you on the whiteboard, I'll show you on E-Trade. And then we just kind of maybe get 1 or 2 sideways bars of volume, really low volume. And I'll take a line. You can pretty much draw a line on any platform just to show you visually what the flag looks like. So here's our pole of the flag. This is our flag here. So what we're looking for is that break out and above that flag, and then as we break out of that flag, we should see this volume start to pick up to the upside. You know, your first target will be here at the top, and then if you break past that, you can continue. And a lot of times you'll get several flag patterns in a row throughout the day. You know, how you're going to use that volume is, you know, you're catching the lowest point. Instead of buying at the open, you're buying at the bottom of this flag. You're using the volume to confirm that the selling pressure is getting lower and lower and lower, and then we get into this area of demand. Super simple pattern, easy way to use the volume. This also works on a daily chart, not just an intraday chart. So now I will jump on over to E-Trade and I'll show you what it looks like on a chart. Alright, so we are on E-Trade Pro, and you can see here we had a run on Apple It doesn't matter what the stock is. I'm just using this chart for an example. And we start to get this pullback. This is that red candle I'm talking about. We got that second red candle, and then at that point we can say, okay, we're starting to form a flag, and we should be planning to bounce off the 20 moving average VWAP or even the 9 EMA. This is the volume I was talking about. Even though we're coming down in price, the volume is very, very, very low. So that's a good indication that we are going to bounce out of this flag and continue to the upside. So that is an example of how you can use volume to figure out when a stock is going to stop and bounce. You can also use this in the opposite direction. So as a stock is running up and the volume starts to die out, it is an indication that you are about to get a pullback. That's all I have for you today. Thank you for coming back for another video. Don't forget to like and subscribe. We are almost to 250 subscribers. That's halfway to 500. And when we get to 500, we're giving a free pair of AirPods away to one lucky subscriber.